Maybe the most important thing I can say is that I think it's the best time ever to invest in crypto. We've removed a huge amount of risk. It's still the case that the vast majority of investors have 0% allocation to crypto. So I think you have enormous upside with dramatically reduced risk. As an investor, that makes me very excited. I think that means people are going to allocate more to crypto than they did in the past. Again, a couple years ago, we were probably talking about a 1% allocation. I think that's going to be 5, maybe 10 in the future. So it's still early in crypto. We're at the point where it really ramps up. I think it's going to be fun.
Matt Hougan begins by highlighting what he calls the most significant shift in the last 12 months. The U.S. regulatory environment moving from a massive headwind to a massive tailwind. Just a year ago, crypto firms faced uncertainty, restrictive oversight, and widespread skepticism. But in 2024-2025, that changed dramatically. The approval of Bitcoin ETFs, bipartisan legislation supporting blockchain development, and a flood of institutional investment have completely redefined the narrative. Hougan believes this policy transformation is irreversible. Wall Street is now deeply engaged, from asset managers and banks to exchanges exploring tokenization.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I mean, there's a lot to be excited about. Probably the biggest event in the last year from my perspective was the change in the US regulatory attitude towards crypto. We went from a massive headwind where everything was very difficult and borderline illegal to a massive tailwind where we can move the industry forward. And you've seen the result in flows into ETFs. You've seen the result in legislation being passed. And you've seen the result in the industry really orienting around real-world applications. The other big change for me, I think a year ago, if we were talking, crypto was still mostly a Bitcoin story, at least to the outside world. Inside crypto, sure, we talked about all the different assets and applications. To the outside world, it was Bitcoin only. The world has woken up to stablecoins, tokenization, and the things that you can do beyond Bitcoin on crypto. And I think that is a big change that will have ramifications for years to come.
100%. And also, I mean, a year ago, it was like kind of Europe, maybe Latin America leading the way, perhaps like, moving aside the control and monopoly the US have had of economy for so long. And all of a sudden, like, the country has picked up, is leading the wave again. Very exciting time.
Yes, yeah, the world's largest market. They say about America that they figure out the right thing after they've exhausted every other opportunity. I think that is true here. But I do think it's a fundamental shift. A lot of people wonder if the US will go back to an anti-crypto orientation if there's a new change in administration. I don't think so. That's not what we're hearing. I think there is bipartisan support. I think we made a one-way shift, and I think you can just look at how much Wall Street is building on crypto now to see that this has been a fundamental change.
100%. And also maybe the nod that the US has given that pushed PayPal forward, and even, states coming up with their own tokens and potentially the trunk token. I also don't think there will be a way back from this point.
Yeah, no way back. In fact, I think quite the opposite. I think, you mentioned PayPal. I wouldn't be surprised to see the largest banks in the US launch their own stablecoins. We already saw the NASDAQ and the New York Stock Exchange looking at tokenization. So everyone who was skeptical of crypto for the last decade has changed their tune. And I think it's, again, a one-way direction. I think it's just going to go from there.
Yeah. So, we spoke about Bitcoin and, how it's been like a concept of Bitcoin market. So beyond Bitcoin and Ether, what are you mostly interested in or excited about when it comes to the digital assets and the more institutional grade?
Yeah, I really think the next biggest product in terms of institutional adoption beyond Bitcoin is actually diversified baskets. So index-based products, I think, are going to be a $1 trillion plus market that people aren't counting on. The reason for that, if you think about the people who have allocated to crypto so far, they're mostly crypto experts. They're people who know about Bitcoin, who know about ETH, who know about Solana. The people who are going to drive the market in the future are people who aren't focused on crypto, who just want 3 to 5% of their portfolio, and they don't have an opinion on how a layer 1 should be structured or whether it's better to scale through a monolithic blockchain or layer 2 solutions. They just want to own crypto. And I think they're going to buy index-based solutions. So I know that's a very tiny sliver of the market right now. I think if we come back next year, it'll be 10% of the market. If we come back 2 years from now, it'll be 30 to 50% of the market. I think that's a big area of growth.
Wow, that's so interesting. And talking about indexes and bringing the ETFs in as well, as a more digestible,
Yep.
say, financial product for the masses. How do you see that side of the market also picking up?
Yeah, I mean, absolutely. What we're seeing with ETFs historically is that the flows build over time. That's been true outside of crypto. I think it's going to be true inside of crypto. So I think we've really just seen a down payment. It's worth noting, at least in the US, the market still isn't fully open. Some of the largest wealth management platforms are just getting around to approving access to Bitcoin ETFs. So a lot of people are excited that we've seen, what is it, $100 billion of flows globally. It really is just a down payment. I mean, I think we'll have record flows in 2025. I think 2026 will exceed 2025. I think 2027 will exceed 2026. If you look at the history of ETFs, I come from an ETF background, they grow for like 5 to 10 years. And I think we'll see the same thing here.
Very cool. Anything else you'd like to add, for our viewers?
I would just say maybe the most important thing I can say is that I think it's the best time ever to invest in crypto. We've removed a huge amount of risk. People don't think about that much, but we've really dialed down custody risk and trading risk and regulatory risk, and will the institutions adopt it risk, and will sovereigns adopt it? We've dialed down all those risks, but it's still non-consensus. It's still the case that the vast majority of investors have 0% allocation to crypto. So I think you have enormous upside with dramatically reduced risk. As an investor, that makes me very excited. I think that means people are going to allocate more to crypto than they did in the past. Again, a couple years ago, we were probably talking about a 1% allocation. I think that's going to be 5, maybe 10 in the future. So it's still early in crypto. We've de-risked. I think we have a very exciting time ahead.
100%. It's really funny for us, being in crypto for so long, thinking it is still early on.
It's so early.
And the industry is moving so fast, and things are happening so swiftly. It feels like, it's been like, what, a decade? And yeah.
Yeah, we're just in the really exciting scaling part. If you think about an exponential curve, it takes a long time for go from 1 to 2, 2 to 4, 4 to 8. But we're at the point where it really ramps up. I think it's going to be fun.
Hougan revisits what happened in 2020 when gold surged first, only for Bitcoin to follow with an explosive rally. Back then, global liquidity evaporated during the COVID crash. But once the Federal Reserve unleashed massive monetary stimulus, gold became the first asset to respond, rallying sharply. Soon after, two legendary investors, Paul Tudor Jones and Stanley Druckenmiller, publicly endorsed Bitcoin. That marked the turning point. Gold cooled, and Bitcoin skyrocketed from $10,000 to $64,000 in less than 6 months.
The data's not perfect, but 2020, just for people to understand, gold basically peaked, and then it cooled, right? So gold had this big run up, kind of ran first. And if you remember, let me set the scene in 2020. If you go back to March of 2020, asset prices sold off aggressively because there was a liquidity crisis. I think March 12th was the big day that Bitcoin went down 50%. I was curled up on the couch. I just don't feel too good. But then all of a sudden, here comes the monetary bazooka, right? Trump was out there posting away on social media. You had the Fed stepping in. You had fiscal policy. They were printing trillions of dollars. I remember tweeting saying you can't print trillions of dollars and not get inflation. And people were like, you're an idiot. You don't know. Inflation is transitory, all this stuff, right? Obviously, what happened is we got this massive recovery and everything took off. Now, when that occurred, gold actually was the global alarm system. Gold ran first. And you can pontificate as to why. My guess is probably people were trained, hey, money printing, gold runs. But there was two people who came out in 2020, and they pretty much started the Wall Street adoption of these assets. Stanley Druckenmiller and Paul Tudor Jones. They both came out and at different times said some effect of, we like it and we own it. Talking about Bitcoin.
Two legends,
right? And if I remember correctly, Stanley Druckenmiller said that in 2018, he called up PTJ and he basically, they were talking. I can't remember who said it to who, but one of them said, yo, these maniacs, 85% of them that owned it at $20,000 a coin, they're still holding it at 3,000. And I think it was like PTJ said that to Druck, and Druck was like, I'm buying. And he just, he just went in. He was like, yo, these guys are maniacs. I'll continue to say it. Stanley Druckenmiller is my favorite investor. Why? He's basically a retail investor just with the GOAT track record, right? Like the guy, he buys, then he researches, right? If he's got conviction, he goes all in, right? And so he ended up buying. Now, it waited until 2020, and then he came out and he said he owned it. Paul Tudor Jones was on CNBC, and he had a famous line. He said he believes Bitcoin's going to be the fastest horse. That got a lot of headlines. That got a lot of attention, whatever. Gold runs first. Bitcoin kind of hung out around $10,000, $8,000, somewhere in that range. All of a sudden, the gold run got exhausted. There was now not as much demand because so many people have been buying gold, and you had gold kind of turn over and cool off a little bit. Still great, right? It was good inflation hedge. But once that turnover happened and you start the cooling off of gold, Bitcoin, then that was pretty much the inflection point. Bam, here we go. And we went from 10,000 to 64,000 in less than 6 months. Game time. It was awesome. We all had a lot of fun. Now we have a very similar setup. Gold is up significantly. It's up over 50% in 2025. People are like, wow, that was crazy. But it looks like it's peaked and starting to cool off now. And all of a sudden, you're now starting to see Bitcoin get a little bit of momentum to it. And so the question is, or what people are insinuating is there some relationship where once gold runs first and then it peaks and starts to cool, is that the catalyst for the Bitcoin, right? The great rotation from gold to Bitcoin. I did hear a pretty interesting anecdote. I have heard, I don't know how to confirm this, but I have heard that there are people who are showing up in like the Diamond District here in New York with all kinds of jewelry and stuff, that like gold jewelry, because now all of a sudden it's, $4,200 an ounce, and they're just turning it in, and there's like lines and stuff. I don't know if this is true. Like, we'll have to find somebody to try to confirm this, but that would signal to me the gold run. If people are like turning in the gold, right, in order to get dollars, then you basically just get the satisfaction of the demand. And so if that's the case and Bitcoin runs from here, it'd be a repeat of 2020. I don't like to extrapolate off of, kind of one single data point. But when you line the charts up, it looks awesome. Like, it looks like Bitcoin will go up. So let's see what happens.
Matt Hougan's message is unmistakably optimistic, but grounded in structural realities. Crypto has matured. The U.S. has embraced it. Institutional money is arriving, risk is falling, and new financial rails from stablecoins to tokenized assets are connecting the old and new worlds of finance. Meanwhile, Bitcoin stands on the edge of what could be a historic rotation, one that mirrors gold's handoff in 2020. For investors, Hougan's conclusion is clear. The crypto opportunity is no longer a speculative bet on the future. It's a calculated investment in the financial infrastructure of tomorrow.